Hey guys, what's going on? All right, so today we're talking about why crypto is sick, what happened, and where it's going from here. So you can see here, right? Crypto's been struggling since October the 10th. This start of this chart here, just like it is October the 10th, and there's a bunch of these lines going off here. Silver at the top, Google, Tesla, etc. Right? Crypto, ETH, BTC, Sol, Hype have all been struggling since October the 10th. Now, if you remember, on October the 10th, there was the thesis that MicroStrategy being removed from the MSCI was the reason for the October sell-off. Could still be. I mean, all that news is out now, and it's still, during US sessions especially, crypto, Bitcoin, is still struggling a lot. And this is despite the fact we supposedly have a bunch of new liquidity coming into the market. If we look at this chart, we can clearly see, look, everything's been fine, but crypto has just been straight down. So why have our bags been so badly affected? And this is just Bitcoin against silver, right? Obviously, silver ripped to new highs today. Everyone's now calling for silver to $100, $200. What this chart here shows you is Bitcoin priced in silver. So how many ounces of silver it costs to buy one BTC. And you can see this like cyclical nature, right? Like it used to cost at the high in 2017, it was 1,200 ounces of silver would buy one Bitcoin. Then you had an 85% correction. After the 2021 high, we had a massive correction as well, 75%. And look, this is like there's a diminishing returns here, 85% from top to bottom, 75% from top to bottom. You could maybe argue, look, that's dropping by 10% each time. We should see a drop of like 65%. That puts it a little bit lower than it is now. I tend to think we're probably going to see something in this kind of like green zone here, maybe. Oh, in this kind of green zone here, looks like a relatively good place for a reversal. Maybe it sort of front runs that a little bit, but you could pick any asset. I know I'm picking silver here because it's been the best one, but whether it's the NASDAQ, whether it's the SPX, whether it's gold, like Bitcoin, well, crypto generally, but Bitcoin especially Bitcoin has been struggling against all these assets, right? No, it's not a surprise to anyone. And especially it's been struggling extra ever since that October 10th. And again, just like remember this, since October 10th, this divergence has just been aggressive. And it's been especially aggressive, just checking through the chat, it's been especially aggressive in the US session. Just look at this. So this is like returns in the US session. Like the US chart is the blue line. When the US session opens, it's just like Bitcoin's just getting absolutely killed. Now, you can say that this is just going to get corrected by one massive green candle. Maybe it will. But this is what the sort of the price actions look like since that October 10th day. All these massive red candles here, the US session starts at like 2:30 UK time. Look at this. Big sell-off here. Again here, massive sell-off. Again here, US session opens, bang. US session opens, bang. You know, US session opens, bang. Look at all these like horrible red candles as soon as the US session opens. I mean, it's brutal. What has been going on since this October 10th day? This is just an interesting stat. Like we're getting now very close to the average cost basis for the ETFs, right? So if I just show you this, look, the ETF cost basis is around about 85K. All ETFs about 83.8K, you can see here. So this is the average price that all the ETFs have bought at. Now you think about who the ETF buyers are. ETF buyers are institutional buyers. Like when these kind of figures go underwater, if they end up going underwater, it's really not good advertising for crypto just generally. So you've got Bitcoin's in a pretty tough spot, really. If it goes anywhere below this average cost basis for ETF buyers, pressure really does start to build. You've also got this tax loss harvesting thing. A lot of people have been saying, look, the reason this year has been bad and it's going to continue to be bad up until the end of the year is because whenever there's tax loss harvests, whenever there's losses that Bitcoin's got, people want to harvest those losses. Now, obviously, you need to have a year of losses to be able to harvest anything, because if Bitcoin hasn't lost anything throughout the year, there are no losses to harvest come tax deadline in December, by December 31st. So there's only really been 3 years where you could have harvested any losses for Bitcoin: 2014, 2018, 2020. And each time, like, the average return in December has been pretty bad. And there's been like some decent recovery in Q1. So 2 out of 3 times. Q1's actually been pretty good because a lot of that selling has happened in December. So maybe we're going to see another kind of Q1 potential reversal, because we're going to have very, very likely this tax loss harvesting in December is likely to continue as people actively sell their crypto and their Bitcoin to realize some of those losses. But you can see over 13 years, like, that's the sample size that I've got here. 3 of those losses have 3 of those years have been losses in December, and the average return in Q1's been pretty good, to be honest. 1 out of 3 times January's been green afterwards. 2 out of 3 times Q1 of the following year has been green. So maybe we're just seeing the ends of these tax loss harvests coming to fruition. Maybe we're starting to see all these tax loss coming to fruition. But this is going inside with liquidity, right? Everyone's been speaking about liquidity. Everyone's saying global liquidity is refreshing, and it's not necessarily untrue. The US is going through like fiscal easing. China is trying to expand as well. Japan's tightening. The European Union's kind of like fixed. This is just like interest rate policies of those different jurisdictions. But it's not so clear, cut and dry as like whatever the US is doing, whatever Japan is doing, it means that Bitcoin's going to go up or down. Because I really, really just want to make sure people are prepared for like this potential scenario. And this is what I really want to talk about, to be honest. This is the Fed's balance sheet, the QT balance sheet, the one, the quantitative tightening balance sheet, the one that everyone always quotes when we're talking about, look, liquidity is expanding, liquidity is contracting. There's a bunch of these you can look at. But I just want to be very, very clear, right? If you remember back in, well, probably you don't remember because most people weren't here in 2019. But if we take the data, in 2019, QT ended, right, in July. Very, very quickly, actually, the Fed started adding to their balance sheet. You can see this blue line start to trend upwards. But look, this is where total, like the total crypto market cap excluding Bitcoin and ETH was, so total 3 minus those 2 things, was in July. And let me just take this measurer here. It took 335 days for us to break above the level that we were at prior to that breakdown. And again, so just imagine that's the case. This is when QT ended here in, November, or was it December actually, really, wasn't it? So if we go 335 days out from there, like a year out from there, like, are people ready for like a year of pain? Like, is this something people are ready for total 3 to not expand past this line until next December? This is what it took last time. QT ended, liquidity was supposedly coming straight back. It took a very, very long time for us to break above that level. Now, I'm not necessarily saying it's going to be that long, but it's not. But like, I just like, are people ready for a year of pain? Because this is the key thing that I think we really need to get our heads around in crypto, is that there is a chance. This is an incredible piece of writing from Santiago Santos, super smart guy. But there's a very, very strong chance that crypto could be exhibiting the same adoption curve of the internet and the same kind of like fractal that the internet did, which is where adoption continues. So growth of the tech, adoption of the tech keeps going up, but prices just don't necessarily recover. So if you hold a 10-year view on the industry, the odds are attractive. Holding that view, however, might be psychologically very difficult. You should also be prepared to watch others make money elsewhere and potentially have crypto forgotten. And what he's basing this off is this chart here. This is the chart of the dot-com boom, basically. And after the dot-com boom, we had acceleration, aggressive acceleration in adoption of the internet. But it took 10 years, it's often referred to as the lost decade, for asset prices to catch up to the peak. It took 10 years for the SPX to recover. It actually took 15 years almost for the NASDAQ to recover. Like, the adoption rate of the internet kept getting more use. Yet, yes, prices went up eventually, but there was 3-4 years where prices went down whilst adoption ticked up by basically 2x. 400 million users to about 1 billion users whilst prices were going down. I mean, it's like aggressive. It's just a complete disconnect of fundamentals and price, essentially, as the initial run-up, which has just made things so expensive. And if we think about this is like happening in crypto right now. This has been happening. It is happening. I'm not saying it's going to go on forever, but it absolutely has been happening. Let me just show you this stat quickly. What's this saying? Couldn't be any worse than what we have now. HODL, and eventually things will change. Yeah, I mean, I don't disagree with you, sir, actually. But this is just like really clear, right? In the last 90 days, stable coins dominate on-chain transfer value. So actions that have been happening on-chain, stable coins are dominating that narrative. That's really, really important to kind of like wrap your head around, because the breakthrough piece of tech that crypto has really created, which is essentially stable coins, are now beating, in terms of like transfer volume, native assets. This maybe doesn't sound that important just in and of itself, but I think it actually is pretty profound, right? Because what it shows is that you've got increases in adoption without increases in price. This, let me highlight this chart a minute here. This bar chart here, right? This candle chart is total 3 minus total 3 excluding stables, which means it's just stables, right? So this is the market cap of stable coins. It's like the best chart in crypto. You've just got higher highs, higher lows. I mean, you haven't had a negative month since October of 2023. The market cap has been continuing to grow nonstop. And if we overlay the market cap of total 3 without stable coins here, we can see that we peaked in 2021 and we just haven't hit those highs since. Yes, we had a big drawback and we increased since that low, of course, but we just haven't hit anywhere near those highs. What does this show you? This shows you that, look, adoption of the tech is increasing. More and more people are actively using stable coins, yet price isn't filtering down to the sort of like to the asset layer, right? You've got increased adoption in the tech, but it isn't filtering down necessarily into the actual value of the asset class at large. This tells you the same thing. This is daily exchange volume. We peaked in 2021. We've just seen really lower highs and lower lows since, especially in the last year. If I take this to the last year, look, this is just a clear chart of lower highs, lower lows. So despite the fact we've got increased adoption, these stable coins are still increasing. The velocity of stable coins is increasing. We've got penetration across multiple, TradFi industries. The actual like trading of our tokens is not increasing. So there's a disconnect between what Santi was saying here. You've got a disconnect between price appreciation and adoption. And this is a chart of total 3, again, minus stablecoins against the Russell 2000. So the Russell 2000 is an index of like 2,000 companies in the US that's sort of like more textbook for the true sort of like underlying industrial economy. It's not the top 500 companies. We just had like an open close on the monthly time frame above the old 2021 all-time high. And you can see these two charts, the Russell and total 3, they used to move like in unison. They move together here, they move together here, and then this last move here, the pattern's broken. Now, this could be an October 10th break, right? Because this little dotted line down through here gives you October 10th. It was kind of going in line, and then there was a disconnect. So maybe it's just that we just snap back, right? We just snap back. Suddenly these differences, they just close, crypto catches up, everything's completely fine. But I think it is worth considering that there's a very strong, there's a chance we continue to see adoption of the tech increase without value accruing to the asset layer in the shorter term. I'm still super bullish, but like crypto generally, right? This is the adoption. If we just zoom out and look at this adoption rate of the internet against crypto, the nature of the internet means that everything's just faster and more compressed. So the idea that crypto stays like underwater for the next 15 years, I don't think is necessarily true. But I definitely do think it could be true that we stay definitely under pressure, definitely underwater for an annoying amount of time and see other assets, especially AI, etc., do really, really well. The idea that we couldn't have, a bear market again, we couldn't see prices go down until, the middle of next year, maybe a little bit later, is, I mean, we just need to be prepared for that scenario if it ends up happening. Because this, over the last few years, since Trump got elected, what have we had? We've had SEC leadership change. Should have been incredibly bullish. New SEC chair, very much pro sort of like freedom, pro crypto, exactly sort of what you'd want. Genius Act signed. I just hate to remind you, Genius Act being signed was meant to be super bullish for all stablecoin kind of token plays. This is Curve in that period of time, like just dead. Athena maybe. I mean, maybe Athena's not a very good example because you can't really pass on yield to stablecoin holders. That's kind of the point of it. But you've seen, again, clear regulatory backdrop increasing with adoption increasing, yet the actual underlying assets that are tied to these things have been going down in price. This disconnect is tough and it's like made people feel very upset, right? And it probably will continue to do so. But having an idea of, okay, when do we think what this could continue? And are you prepared for more pain ahead? I think it makes it a little bit easier to sort of like grasp and understand like, okay, we could still see disconnects between adoption and price. But as long as we have an idea, or as long as I have an idea, me personally anyway, as long as I have an idea about, okay, I can see a vision for what I think the future of finance looks like. I can see a vision for where I think tokens are actually going to accrue value, because if their infrastructure is used, if their tech is used, there's going to be some value accrual back to that token. It's not that clear to see for a lot of tokens, to be honest. We can start to sort of like formulate an idea for which tokens are actually worth holding and accumulating during aggressive, like during these periods of time that have just been like super hard, right? And that's the question that needs to be answered. Which tokens are actually going to accrue value? Is it tokens with buybacks? Is it tokens where the infrastructure gets used? So is it going to be to L1s? Personally, I don't particularly think that the vast majority of a lot of the valuation in L1s right now, they're priced to perfection, right? They're priced for massive increases in adoption. And so unless we get these new users on chain, it's going to be very hard for these things to truly grow into their real valuations. It doesn't mean that they can't. In actual fact, I think they probably, some of them definitely will and will be massive winners. I just think we need to be prepared for the situation where, as I said before, we're going to have a disconnect between asset prices and the adoption rate. Adoption rate increasing and the value of the assets actually not necessarily catching up to that in the immediate short term. And as I said before, the idea that just because we've got liquidity increasing, we've had liquidity increasing for quite a while, just because we've got liquidity increasing across, I mean globally as well, across the globe. The last time that happened with the COVID level bazooka that we had, it took a year before we saw price break above the period at which like QT ended. So the question is like, are we prepared for that scenario? That's the real question. Right, let me go through the chat a minute. Where's Kyle? Where's Kyle? Where's Kyle? Yeah, Kyle's on Christmas break now, isn't he? Let me just quickly go 1 second. Don't spam the chat. Kyle's a good boy. You guys can show Kyle as much love as you want in here. We love Kyle. Right, this is what I wanted to show you. And yeah, another thing really is just right now, Bitcoin's in a really tough place, to be honest, because as I said, you've got the situation where short-term cost holders, well, the average cost basis of the ETFs is like 85K. You've got long and short-term holders for supply, for supply and profit and loss, like 25% of the supply now is underwater. And Bitcoin's kind of trapped between these two levels, right? Short-term holder price right now is like about 100K. So price right now is like 88K. So you got like 100K as a barrier above, and like, 81K as a sort of like ETF cost basis barrier below. So the short-term holder is above, the cost basis for the ETFs is below. I definitely see a scenario where we basically retest that underside of the sort of 100K. There's a lot of people underwater there. They'll probably be getting out. That probably means we're going to retest the true ETF cost basis. More than likely we get underneath those levels, I think, as well. I don't think the next few months are going to be super plain sailing. That's what I think. But I do think over the next, 6 months, over the next sort of 12 months, we absolutely start to see what people say. My face is covering. My face is covering something. I think in the next 12 months we actually start to see true this liquidity that we've been. I think we start to see the liquidity that is being pushed into the markets via all of this from the US, from the rest of the world. Obviously not Japan. Japan are tightening at the time. Start to actually end up playing into markets and filtering its way through. And we start to see expansion of, where's my Russell chart? Where's my Russell chart gone? Oh, yeah. And then we start to see this gap kind of close. That's what I think. So I just think we need to be prepared for more pain ahead when we're zooming out on the sort of monthly time frame. But I still think these gaps do close, and we start to see crypto begin to sort of close this gap down. The liquidity start to actually make a difference. I've done a bunch of different shows on, the PMI, the business cycle re-expanding, liquidity coming back into the market. But I just don't think it's going to be something that happens like that immediately. And actually, if we go off history is very good barometer to say that it doesn't just snap back straight away. Because again, if we look at the liquidity index, the last time QT ended, it just took a long time. It just took a long time before we started to truly see Bitcoin and crypto break above the levels that we ended QT at. And if you remember, last time was a complete bazooka, right? It was absolutely crazy. COVID was a ridiculous amount of stimulus. So that's the point. Let me go through. October 10th was horrible. Yeah, I mean, the market's just looked absolutely wrecked since then, hasn't it? There's been this price action is crazy. Look at that price action. I mean, it just looks awful. It's so peculiar. Absolutely ridiculous price action. All right, chaps. I think that covers it for today. I put a timer on my phone to make sure that I didn't waffle on. My timer's on. Let me go back to full screen. Right. That covers today's show. Oh, let me real quick, just tell you about today's sponsor, Uphold. Uphold, incredible exchange, regulated in, well, so Uphold sponsoring today's show. Let me quickly get you the thing. Da-da-da. The reason actually I like Uphold more than anything is because they have this little card, right? Now they have a card, and this particular card allows you to spend crypto. If you've been in crypto for a long time, you understand how annoying it is getting your money from being on chain to being like in your bank and being able to be spent. So Uphold have an incredible little card that allows you to just spend crypto. Unbelievably efficient, unbelievably useful. Massive thanks to Uphold for sponsoring the video. Nice. All right, let me go through the chat, guys. I'm just going to see what you guys are saying, but that covers today's show. Just, I want to make sure everyone's prepared for a chance where this liquidity snapback isn't immediate. I think if we're prepared for that, it makes life much easier. be greedy when others are fearful. Yeah, I mean, I totally agree. I'm actually not saying like you need to be worried in this case. I think like personally for me, if Bitcoin comes down to at these levels, it's good value. I've been buying since like 100K. If Bitcoin comes down to 70K, 60K, oh my gosh, it's like a mass. It's like a gift, right? I definitely agree. Yeah, I mean, it might get more bloody. It might get more bloody. I actually, my base case for now is that we retest 100K, and then we sort of break down, make new lows. Maybe we start sort of pushing up by the middle of next year, halfway Q1, Q2 of next year. Could be the sort of like end of this cycle. I don't think it's going to be as simple as, you know, October is the top, and then October 2024, so October 25 is the high, October 26 is the low. There's been a bunch of different things that have happened, you know, over this cycle. You know, Bitcoin made an all-time high before the halving. That's never happened before. The sort of like step nature function of Bitcoin because of the ETFs was very different. None of the sort of cycle peak indicators were hit. Because none of the cycle peak indicators were hit, it's very, very likely that we don't see such aggressive selling to the downside. And that would make perfect sense as well, just in terms of everyone will be convinced that the cycle's finished, and then the new cycle starts way too early. Everyone who thinks that the liquidity thing's going to just turn things around would capitulate. It would like wreck enough people. I think it would be sufficiently awful for the majority of people. So that sort of thing makes a lot of sense to me. Yeah, DCAing always wins. No doubt, no doubt. All right, you guys. Thank you ever so much for being here. I really appreciate it. I hope you have an excellent Christmas. My gosh, if you're celebrating, you know, Merry Christmas to you. Hope you have an excellent time for a lovely festive period. If you don't celebrate Christmas, just Merry December to you. Otherwise, I hope you have an excellent day. Thank you ever so much for watching. I shall see you. I guess I might see you in the new year. No, I'll see you next Sunday. See you next Sunday. Thanks so much for watching, you guys. Ciao, ciao.